that's a quick wrap of what has happened in the market this week. What we're looking for, or what's going to happen this week, is going to be very interesting. We're coming into the end of the week, end of October, end of month, and there we go. There's Alexis's screen, and I've just summarised everything that you're about to talk about there, Lexi. I'm really sorry.
It's fine. It's fine. You've done the work for me. We can move on.
Yeah, I just want to point out there's been a daylight saving shift, guys, as well. So just have a look on a daylight saving shift for the European market and the UK market. So London Open, just be careful of your times. If you've been used to a certain time, just double check that on, I don't know, iPhone World Clock or X Factory. But light on with major news. It's just that we've got an election coming up. Lexi, what have you got with the fundamentals?
Well, I've got some interesting stuff regarding, as usual, we are talking about China, but I think the funny thing is China's figures are actually giving the Aussies a boost, right? So we had nice, if you just look at the indexes over the side, we had nice Aussie numbers last week. Started a little bit shaky, but the Aussies really started moving midweek, and if China continues, I think there's going to be a lot more confidence in the Aussie. Also because Aussies, I think previously they were at certain probably technical levels that really allow it to kind of start to shift. So let me just pull up where's the charts. All right, so if we look at, I'm just going to go to Aussie dollar. This is on the, let me just go to a daily time frame. All right, so the technical levels are there, but I think the China really did help the pop last week, and it really does look nice and bullish on the Aussie dollar. I'm looking for more strength in the Aussie. Aussie Kiwi a little bit slow to start, but we have Aussie Yen already starting to move, so it's quite exciting because if this kind of follows in tandem with the China market giving it a little push, we could be seeing the start of a new trend change. And if this potentially can be a change of so-called direction, and if we are able to find the technical levels to enter in, it will be a nice ride to at least the next the next highs and the next previous highs and the next levels, and it gives us a nice move up. And then that will be we've been in the range for so long.
Yeah. It has. All the markets have been ranging. It's been a bit tough going, especially if you're a trend trader.
Yes, definitely.
Not been fun. But yes, the Chinese numbers out, I think they came out on Tuesday. It certainly gave us a bit of a push along because they are so heavily influenced by the China market. Yeah, and they've done really, really well. COVID's looking like a bit of a blimp in the rearview mirror, whereas a lot of the other economies, like the European economy, they're all staying. In the UK, the US have got a couple of things really they're trying to juggle there. But yeah, China's done well this week for the second quarter. Not quite what they wanted, but everything else is strengthening.
Yeah, which is quite cool because I think if usually after situations like these where this is probably a deep, I wouldn't say a recession, but it's a deeper, more protracted slowdown of all economies due to the borders closing. So it really is a scramble to the countries who can start to link up its borders again slowly. Right, so we already have, for example, Singapore with Germany has just started opening its business channels, so-called. So they are allowing slightly more lenient flights from Singapore to Germany. And the interesting thing is I am looking for Asian market recovery. And, while most, I would say the Euro-US markets are still having negative postings of quarterly GDP, it is starting to be exciting for me because Singapore has its first green. So we have posted a 7.9% so-called recovery from previously. So in terms of domestic demand, I am looking for probably a Singapore market as an indicator for its neighbors, for our close neighbors, to see whether we can get the Asian currencies up, and hopefully Australia being so close to us, will follow suit. Together with its strong ties to the Asian market as well as to China, right? So with that, we can also look at the nearer countries towards the Southeast Asian side. So that would be Australia, New Zealand. I feel that these countries have a chance of recovering a little bit faster than the Euro, US, UK market, because they're a little bit further. The borders, the country's a lot bigger. The borders are not as and COVID is not as tightly controlled as as the rest of the countries on the other end of the globe. Yeah. So with that, which is it probably is going to be a pretty interesting time to watch currencies like dollar Sing, Aussie dollar, or even the Aussie-based currency, the Kiwi-based currency. So these are the three currencies moving forward as economies scramble to open borders. We're going to see whether they can get the COVID numbers controlled, get their safety measures in place, and the moment the border starts to loosen more and more, we would probably see a slow, steady strength in their currencies over a medium to long-term period of time. So we are entering the phase of who can recover faster, and the China market has already taken its big step forward. With a nice positive 2.7% Q on Q, 4.9% year on year, and as China being number 2 in the GDP ranks, right? When one big giant moves forward, the rest of us little ones will have some room to catch up. So this is interesting to watch, to see the so-called race to recovery.
Yeah, interesting. Yeah, the results have been really good out of China last week. Like I said, there was a bit of a bump, but nothing unfortunately substantial. So yeah, with the Aussie dollar. I know you've been following the Aussie dollar. Is there anything else that you've been really keeping an eye on there?
The Aussies, actually I've been following the Aussies, the Kiwis, and of course the little dollar Sing over here. So again, it's interesting because the Sing dollar is a very regulated currency, which is why its recovery is going to be a little bit different, because for example 1.35, as I kind of mentioned before, it is kind of the bottom range where I think the Singapore government will allow the currency will go to. As you can see that this 1.35 period area is some, I think it's a level that they're keeping watch. If there's no if there's no big shifts in the market, this level is the lowest that the Singapore government or the MAS, our regulatory authority, will kind of allow the currency to go to. So, and of course, being Singaporeans, we like to control everything. We have a very nice, we have a very nice range. So because the Singapore government is, they like to control everything. It's starting to get, it's a little bit easier to trade, because we know at certain levels, it's not going to stay there for too long. The government will step in behind the scenes. They're not going to announce it, but they will step in to kind of do some adjustments in their global currency portfolio to at least keep the US dollar competitive to trade, competitive to its import and export. So it's already touching or testing this 1.35 level over here. I am waiting for moves for a stronger dollar, weaker Sing, and it's not so much as to US side policies, is more to Singapore side policies, because we do know the Singapore government does interfere a lot in our lives, right? So this is a level I'm interested to see whether we can get a conclusive bounce and probably head up to a nice medium 1.4. To keep its currencies competitive, to not let the Sing dollar weaken too much, but again not allowing to get too strong. So we are looking at local Singapore dollar currencies. You can see the Singapore currency actually travels in tight ranges, depending on whether there's a crisis or not. It will move to a certain range and try to stay there for a while. So you can see a lot of government intervention in the currency over here. Yeah, this was when things were recovery after post 2008 financial crisis, trying to control it. And I think this is the window between 2015 to 2021. You can see this is the window I think the governments will feel most comfortable at. So I am looking for longs on dollar Sing, really based on how the understanding of the Singapore because the Singapore government does like to dabble. So this is a potential on a monthly chart. Let me go to the daily chart. Where's the daily? Okay, so I'm just going to go weekly first to have a quick peek. So I'm going to zoom out and you can see that, pending big moves, they always try to come up to a minimum of like 1.35. And the moment it hits too high, something's going to happen and they're going to help to, shift it into this medium range. So we're at 1 point, this is a daily time frame. You can see 1.35 multiple tests. It's really hard to get the currency down below. It's probably some big news and all that where the government can't quite control it, but this is a nice sweet spot, 1.35. So I am expecting for longs. It is already starting to test it really aggressively over since September all the way to November. It's tested it 4 times on the daily time frame. So I really think the probability to the upside is a lot higher than the probability to the downside over here. So
popular
this is
level there, Alexis.
Very popular level. Yeah, it's a very popular level.
Government intervention there, no doubt.
Yeah, very clear.
Yeah, it's a very, and that zone just below where exactly that secondary zone where they allow it to go to, I don't know, is that humoring the market and letting them?
Yeah, it's about 1.34.5, like 50 cents lower than the other 1.35. I mean, they probably either undershoot or overshoot something over here. Yeah, so on the shorter time frames, definitely I'm looking for a change in trend over here. You can see this is it's been consolidating here for the entire half of October. The price is just trying to figure out whether or not it's got enough room to move. It's probably influenced by the US dollars itself, but government intervention is there trying to hold this level steady. So I think the moment we see any concrete, once there's a concrete election result in the US, which means about beginning November, we are going to see the Sing dollar pick a direction and just go. Once the news is up and over, and there is a clearer direction on who won, Trump or Biden, it doesn't matter. But I think first week of November, it will be a clear sign the price will either, the price of this will either, where's my yellow pen, will either start to cycle back up, or it will dip back down, depending on the knee-jerk reaction, and then the government will intervene and it should try to, start to do this again. Regardless of what happened, I believe that it is an up, and this is due to the government intervention. They don't really want the US Sing to go down here. So it just as a matter of when and how. So it's either I think if Trump wins, it's going to go like that. I think if Biden wins, it's going to go like that, something like, I think so. So this is my assessment based on largely on the Singapore government's level of intervention.
Yeah, until you actually pointed it out, I didn't realize there was that level of intervention. I mean, it's no secret that central banks and governments will manipulate their currency to their policies. But when you pull it like that and just say, look, they don't like it here and they like it here, and it's pretty clear, isn't it?
Yeah, it is like I think like what you said, humoring the market. They probably allowed it to go to the 1 point. I think it's really almost a 134.5 level, right? It's a very neat. If I pull back the 1.35, 1.34.5, that's the Ainslie eyes that spotted it out. You can see it went away all the way back 2017. It's there, over here also a bit of undershoot, overshoot, but this is like it's such a nice area over here where you can see that the policymakers at the government side is probably looking, hey, you're not doing your job, guys, you need to keep it up, and then everybody starts working to get it back up.
Yeah, we're getting expensive.
No one wants to come to Singapore for its tourism. You better do something about it.
Although we hope to get there. Our travel bubbles are looking pretty good. It was announced in Australia for a travel bubble for Australia with Singapore, Japan, South Korea, Taipei, New Zealand, and some of the Pacific Islands.
Yeah, that's really awesome.
So that's looking really good and looking soon. So, on the home front, we'd actually like for some of our borders to open, but that's looking like it'll happen before Christmas anyway.
Yeah,
but that's good. But yeah, missed coming up to Singapore. Really do.
We miss you guys.
Yeah, look, I think we're all climbing the wall a little bit, but it's looking like a bit of blue sky on the horizon, which is really good. And as you said, that all sort of feeds into the building up of an economy and the economy getting back on its track, because a lot of these economies rely really heavily on tourism.
Yeah, that's it. That's right.
It's to get it started. Whereas you're looking at, those European countries, apart from the fact it's going into winter, they're going back into lockdown now. So it's really unfortunate. But yeah, no, that looks looks really. I was gonna say, not something that $4 not something I normally trade. But you're onto the pound Aussie.
Yeah, so I was looking at the pound Aussie, and actually, it's just really a reactionary trade in terms of the volatility in the pound against a stronger Aussie dollar. So, what I am looking for next week is continued strength of the Aussies. Of course, the levels of dollar sync I've already shared, but I am looking to trade the stronger Aussie against whatever I have, because I think the Aussie in terms of its let me just go to the Australian side. I think the Aussies in terms of its so-called numbers plus COVID and all that, I think the unemployment numbers are keeping pretty controlled post COVID. And what I'm doing is comparatively to the other economies, I think the Aussie has a good chance of getting it back up on its feet a little bit faster. And also,
Yeah.
the Aussie has had a difficult 2019, 2020. It doesn't just have to deal with COVID. It had to deal with forest fires. It had to deal with China trade war. So, I think the Aussie has been down for a while, but they're definitely not out. So I think it's they're going to get back up again on your end of the world. So I am looking
Yeah.
for Aussie boosts. Yeah.
We just hope that there's been a few strained relations between Australia and China over the last couple of weeks, and we're just hoping those issues will resolve and they will go back to buying Australian coal and iron ore and a few bits and pieces.
Yeah.
They said they were going to stop doing, because obviously being a resource-rich nation, we really, really rely on those trades to keep going. So yeah, hopefully, and nothing's in writing. It's just been apparently a verbal issue by the Chinese government to pull back on Australian resources. But let's see how that goes. And if that's the case, yeah, you can see the Aussie dollar just strengthening a bit through this time because of China doing so well.
Yeah, and I think I think it's really a political game on right now, because Australia has always had, it's really a political game because Australia always had good relations with China until
Yeah.
Trump started its rubbish. And then I'm sure it's a little bit difficult, like who do you follow, the big boss or the slightly smaller boss, that kind of thing. So I think Australia has had to be really smart in playing the political game, giving a little bit of face so-called to China, giving a little bit of face to Trump. They're really trying to wait it out and see who wins, because I think if Trump loses, the Australian dollar will just say, okay, fuck Trump, let's just go with China and just everything will go back up.
Yeah, and it's a matter
Pardon the
of
French. Yeah.
Yeah, and it would certainly have having to juggle one of our strongest allies, complete with juggling
where the money comes from.
yeah, do not bite hand that feeds us. And I guess this where is that a couple of weeks ago we were talking about it. We got into a bit of trouble because we just sort of said to China, well, hang on, explain what happened. How did this coronavirus start in the first place?
Yeah.
And I think I said at the time we were, hitting above our weight, but yeah, we all move on. But yeah, interesting week ahead there. Well, Alexis,
Yes.
anything else apart from the strength of the Aussie dollar and looking on a retracement on a bit of a rally on the US Sing dollar?
Yeah, no, that's all for me. I mean, moving on, I think it's just a trade with a little bit of risk management. Should be quite tight because we have the elections, we have the Brexit.
Yeah.
So the Euro, the UK, and the US is going to have a lot of movement. So depending on what strategy you trade, I'll say good luck, guys. I'm sure Geoff will be really happy though.
Geoff, yeah, Geoff won't be joining us, but he sent through his charts and he's given me the whole rundown on what he's doing and how he's going about it and what he's looking at. So you're both on the same page.
Yes, awesome.
Which is great. Up No, thanks, Alexis, and
you.
have a good week.
You too.
And coming